Well, we are expecting a quarter of slow growth for HDFC Bank. If you look at the overall credit growth in the banking system in quarter 1 of FY26, it was slow. It was in the single digit, and that is what was reflected in the quarterly update given by HDFC Bank, wherein the gross advances were up by around 6.7%, but the overall period and deposit, they were up by around 16.2%, and also the CASA deposit was up by around 8.5%. The time deposit were up by around 20.6%. On the basis of this, we are expecting the NII to grow by around 6% to 31,640 crores. The PPOP, that will grow by around 9.3%, and the profitability, that is expected to grow by around 7.4% to around 17,370 crores. Now, if you look at the overall cost ratios, that would be under control. The NIMs that are expected to decline from around 3.46% to around 3.4%, and this is basically due to faster repricing of loans. The NPS are expected to be stable. The overall slippages are expected to be around 1.3% of loan. Now, because the deposit growth was better than the overall advances growth, so you might see some improvement in the overall CD ratio for the bank. The overall guidance on the credit growth, especially in the rest of the year, would be very interesting to know from HDFC Bank. But yes, this quarter is going to be a slow growth quarter for HDFC Bank also.
All right, thank you so much, Varun, for getting us all those details. But heading into the numbers, quite an interesting development on the stock price, because HDFC Bank is seeing a decline of over 1%, while ICICI Bank still clinching on that shade of green.